Everyone, this is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. For some of you that joined us right away, you saw a little bit of the behind-the-scenes technical stuff that goes on. Apparently, I hit the broadcast button before I'm meant to, so anyway, you heard a little bit of our chatter. Fortunately, we kept it all clean, so no issues there. Welcome to those of you that may be new for TradeFinder. Let me give you a quick rundown of how that works, as well as those of you that tune in every week. Welcome as well. Got some interesting commentary tonight, something that actually goes back to the conversation that I had with Guy Adami. If any of you watched that, something happened today that I think might be interesting. I'm actually going to do a SPY update tonight, talking about that as well. But real quickly, anytime we do any sort of a webinar broadcast to the public, we need to show this disclaimer. A couple important things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers, we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, if you are brand new, please take a screenshot of this and read it in detail in your leisure. It is important, and we don't want to make light of it. So with that said, let's go ahead and move forward. We will talk a bit about the market itself, and after we've talked about the market, I'll go through and discuss any alerts that we may have closed for our subscribers. We actually hadn't closed anything since last week, and then I've got some things to share with you as well. Then we will go through and talk about our previous case studies that are still kind of considered to be open, if you will, maybe not hit price targets that you should have taken off if you hadn't already. Then we'll look for case study consideration for tonight. We do that each and every week. And then we'll open it up for any sort of Q&A that you may have. Normally that consists of you guys telling us your favorite stock symbols, and we show you what our technical indicators show. Again, not giving individual investment advice, just saying, hey, this is what our charts show based on the symbols that you're interested in. So with that, here's the market. So the market did finish to the downside today, but that's not really that big of a deal. The thing that's most interesting, that I'm going to switch away from the market, then I'll come back to the market. When I was having the conversation with Guy Adami, most of it was regarding gold and factors that apply to gold, why gold hasn't moved, et cetera. And we talked about interest rates. And then I've also mentioned on a couple of the SPY updates, a couple of XPY updates ago, I should say, wondering if there was going to be Fed intervention on the fact that interest rates have been going up so much. Well, today we had a 20-year bond auction, and it was the most well-subscribed to bond auction that we've had in a while. Now, the way that works is when you have a bond auction, they have something called a bid to cover. Basically, that is a number that represents demand, right? Because we all know everything is supply, demand. Well, the bid to cover is how many bids there are for each bond, treasury, whatever is being offered. And again, today it was the 20-year, which you can see from the representation. I'm going to show you the 10-year as well, but TBT is the thing, the symbol that most people look at as far as the 20-year. It's ultra short. And you can see on that move and how vertically it's gone. Well, this may kind of stop that in its tracks. And I was wondering if today represented Fed intervention, as far as the fact that the previous bond auctions going back for the past 2 to 3 weeks have not been good. And when the subscription interest is not very good, the interest rates go up because they have to sell those, right? We have to pay our bills. We have to pay our debts. We have to fund all of our programs. We have to fund the stimulus. All the things that we're doing here in the U.S. has to be paid for. And the way it's paid is by auctioning off more bonds and treasuries. That's how the government does it. So we have bills to pay. We got to get them sold. If there's not a lot of demand, then interest rates go up. So the lower the demand, higher rates go in order to attract money to come in so that we can get those dollars. Well, when the demand is higher, that pushes rates back down. So rates were up, as you can see here on the 20-year, rates were up, and then came the auction, and things started to move back down a bit. And bid to cover was 2.53, I think, and the average was 2.38. So that doesn't sound like a lot, but that is significant. When you get above a 2.5 bid to cover rate, that's high. That means there was a lot of demand for that 20-year. And so I think that's the important thing too. This is not a 10-year, this is a 20-year. And the fact that there's a lot of demand, that means people are willing to take this rate for 20 years. If rates are going to go significantly higher, like a lot of people have been forecasting, why would the demand be so good right now? I mean, wouldn't you wait? It would be okay to see an average bond auction, a B or C rated bond auction, but this one was rated A. So, if rates are going to go significantly higher, you think some of those dollars would be waiting for those higher rates. So one of two things happened. Either just the normal course of the business has leveled off rates for a bit, or the Fed did step in, and that's where that extra interest came from, and they bought them. Kind of coincidental, maybe, that the Fed gives their statement tomorrow. This has been a two-day Federal Reserve FOMC meeting. So they do Tuesday and Wednesday, and then on Wednesday they come out with their statement, their policy of changes, if any, and their statement. So that happened today, a day in front of that. Maybe that's just pure coincidence. I don't know. But regardless, it doesn't really matter which of those two scenarios caused such demand in the 20-year today. The bottom line is it's likely rates have peaked out for a bit. And you can see that we have that gap there in the 20-year. And so we may very well come back and close that up a bit. So let me show you the TNX. There's the 10. You can see that's kind of already leveled off a bit. So it does look like for the short term, interest rates have done their thing. Maybe we have the wave 4 correction. Maybe we just consolidate a bit. It also coincides with that really high ADX in the DMI getting near 70, which is extremely high. And so that usually needs to work its way down. Again, it doesn't necessarily mean that we're going to have this big pullback and create the wave 4 corrective move. Maybe we do, maybe we don't. But it looks like, as far as risk of a significant move higher in rates, that has diminished a lot. That should be positive for the equities market. The equities market took a bit of a break today. They're waiting on the statement. Nobody wants to get in front of it in case Chairman Powell says something that was different and causes the market to move. And so tomorrow afternoon, we'll see what happens when the statement comes out at 2 o'clock and the conference afterwards. So it could be an interesting afternoon as far as up and down. You tend to kind of want to just sit back and allow that to play itself out, not really make any sort of significant trading decisions, especially not right after that announcement. I mean, if you wanted to close something before it in the morning, that's fine. But making trading decisions right after that is probably not the best time, because the initial knee-jerk move usually gets retraced. That happens almost every time there's a Fed announcement, whether it's up or down in the market. Usually that initial move gets retraced or corrected back the other direction. So that was the big news of the day that I wanted to fill you in on. So let's go back and take a look at the market itself. And you can see that, well, why didn't that cause the market to rally? Well, we were a little bit overbought. Look, we're kind of sneaking away from that 10-day moving average. So if I take this and walk this back, which is one of the really cool things that you can do, look how clean this is. There's a lot of charting services that you can go back in time. But as far as having, the best Elliott Wave program, in my opinion, and being able to just go boom, boom, walk it back one day, is so nice and easy. You don't have to resize the chart, anything like that some of the other services have. So you can see that there we closed yesterday, and then up at the high of the day, that's where that separation was from the 10-day moving average, and it just really wasn't much room to move further to the upside, especially with the FOMC announcement tomorrow. So we kind of took a pause into the close, but nothing significant at all. We finished down, half a point and 13 basis points percentage-wise. So not a big deal, but still made a higher high on the day, which is important as well. So the close was a little lower, but we still made a higher high on the day. And I mean, we could even pause again. I don't know. We'll see what happens tomorrow, unless Chairman Powell says something unexpected. We could be off to the races again up towards that 420 level. Now, the question will be, well, we could have a little bump in the road right here, right? That even number at 400. That could be another line in the sand where the shorts try to take a stand. So maybe we bump our head on that level and pull back a little bit. But once we break 400, it should be a pretty clean run to 420. So if 400 could be a little resistance, the high of the day was 397. So that's not very far away. And again, once we get above that 400, then the 420 should be clean. That's when it really gets interesting. We've been talking about this for how long have we been talking about this? Specifically 420 ever since we came back here and hit 381 back there on the 8th of January. And so we're into mid-March. So 6 weeks ago, we started talking about the 420 level, and now we're getting awfully close to 400. So from that standpoint, maybe a little bit of resistance over the next few trading days. We break above 400, and then we have that clean run to 420. I think the stimulus package, I've mentioned this before, was already priced into the market. We knew that was coming, but now the checks are coming out. So are we going to start to see evidence of what are the consumers going to do with that money? Are they going to save it? Are they going to spend it? What are they going to spend it on? Are they going to trade with it? Those are the questions that'll be answered over the next several weeks, not just short term, but over the next several weeks. And all that means is rotation. Where does the money rotate to within the markets as far as what consumers are doing with those stimulus checks? So again, my opinion, the stimulus package has already been priced in, so we're not getting any sort of a big bump out of that. But the question will be, when the early signs of what consumers are doing with that money will give us an idea of where to trade. So we've been kind of balanced. Showed you that we had closed that VTV, which was value. We added to our XLY, which is consumer discretionary. Kind of seems like the right place to be with stimulus money coming into the consumer's hand, right? Consumer discretionary. So I think all that plays out pretty well as far as what the market's going to do over the next several weeks. So pretty exciting with that bond auction. That's a big deal. And I've mentioned this numerous times that if you want to be a good equities trader, you need to have at least some sort of a working knowledge of the bond market. You don't have to be a bond expert by any way, shape, or form, but you need to understand how they work and how the bond market and the equities market intertwine because it matters. The bond market is huge. It's massive. It's bigger than the equities market. There's really smart traders in the bond market. And so what happens in the bond market does affect the equities market. And we all have so many different things that we look at, technical indicators, et cetera, that we look at for the stock market itself. Well, I would submit that looking at understanding the bond market is important as our technical indicators are to what's going on. And Elliott Wave is a great one for the bond market as well, especially the bond market, because I just mentioned the bond market is even larger than the equities market. That means there's more money and there's more people that trade in the bond market. The more liquid an issue is, the more accurate Elliott Wave is. That's just the way it works, because Elliott Wave is designed to kind of give you a mathematical representation of the buyers and sellers, if you will, bullishness, bearishness, supply, demand, and the emotions of the masses. That's what Elliott Wave analyzes. So the more liquid something is, the more accurate Elliott Wave tends to be. So Elliott Wave is a good indicator if you want to start looking at the bond market as well. That's why I show you these symbols, TBT, TNX, TYX. We look at the futures, etc. There's a reason, because it's important. Okay, so that's our market update. And I did want to show you this. This is on Amazon. So we had in our high value portfolio, which those of you that are not alert subscribers, our actual subscribers asked for ways that we could trade something like this. Like we have Amazon that had this big, huge triangle, but there's no way it's going to work within our parameters for setting up a strangle with $500 of risk. It's not happening on Amazon trading at 3,200. So we have what we call the high value, which is strategies or alerts for higher dollars for those people that have larger accounts that want to have access to trading those vehicles. So Amazon moved to the upside. It was right here. This was the day that they reported earnings. And of course, as always, they blew away earnings. But that was the day that Jeff Bezos announced that he was stepping down. And so that upward momentum got pushed off quickly. Kind of the same thing that was going on with, I'm sure somebody's going to ask about AMD. There was some news about that today with the Intel AMD stuff. So that pushed things down. Well, we timed this pretty doggone well. We took off our put on this day right there. So we had the best closing low. We took it off during the day, obviously not at the close. The next day it did trade a bit lower, but it closed much higher. So we nailed the exit on taking the put off. And so now we have the call to run, and we will probably continue to add to that with the expectation that once Amazon is able to break above that 50-day moving average, it's likely going to continue on to the upside, maybe significantly so, especially once the SPY gets above 400. And you may have noticed a little bit of rotation back into the tech sector today. Not significant, but a little bit. Big tech has been lagging. That's why you can see that Amazon broke down here. And a lot of the big tech stocks have been lagging. But they caught a little bit of a bid today. Now, the sell-off in the afternoon in front of the Fed meeting tomorrow did push things back down. But you can see we hit the 30-day moving average. That's the fuchsia line on the high. The 10 is about to break back above the 30. A lot of people use a 1030 cross as an entry signal. Obviously, we have, that is one of our indicators, but we have a lot more in the confirming indicator signals. But a 1030 cross is one that is included in our technical system. So if that 10-day can turn around, if Amazon continues to creep up, that 10-day breaks the 30, that's going to bring in some more program type trading. So feel like Amazon may be poised to really move to the upside from here. So even though we didn't close anything this week on our alerts, I wanted to share that with you as one of the things that we are doing for our subscribers. So going back over the past few weeks, we can go back and take a look at ENBL. And this was from the 23rd of February. We actually have this as an alert for our subscribers as well. So that's where we sat, and the close was at 657. And so here we sit today, a little bit of a down day. So we need to put a 10-day moving average on. Closing below the 10-day moving average always creates a little bit of concern. So you want to wait and see if we can recover that 10-day moving average. We are closing at 690, so it's above the entry point. However, the fact that it closed below the 10-day moving average, again, something to keep an eye on. Remember, one day doesn't mean a thing. There's head fakes all the time in the market. What matters, because look back over here. So there was a close back above it the next day. So what matters is, do we recapture the 10-day moving average tomorrow? Now, if it has a follow through to the downside, then we have to respect the fact that maybe it's getting ready to create a wave 4 correction, and we may just exit that one. But just this is where you go, okay, let's keep an eye on it. We were overbought just a couple days ago. So that's what's really interesting is you go back to the 10th of March, we have a big up day, and we're kind of getting a bit overbought. The high the next day, and following day still hadn't touched the 10-day moving average. Following day still hadn't touched the moving average. Today we touch it and we close below it. So it's interesting that you go from overbought to closing below the 10-day moving average that quickly. So it's just something to keep an eye on. But that's the fact that we came down to the 10-day moving average wasn't surprising at all. We were overbought. It was likely to come down and touch it. But to close below it, that's a different story. So we'll keep an eye on that one tomorrow. It's 57 to 30, so 30 33 cents ahead of where it was when we entered the position. And then the following week, we looked at WERN. So here's where we were there on the 2nd of March, is where WERN was. So it closed at 44.76 that day. And now we're at 46.22. We had this big spike up a couple of days ago. We had a pretty nice close up at 47. So are you still in this one? Did you close it out on that move? If you follow this one and you're still in it, again, the low just touched the 10-day moving average, recovering that overbought condition that we had a couple days ago. So nothing too surprising here at all. It looks great. Let's look at the DMI. Still looks really good there. A little bit of a move down in the positive directional indicator, but that makes sense because we've had a couple down days recovering that overbought condition back from the 12th. So the previous 2 days down. So we had moved up on the 12th and then back down, but the ADX still moving up, still between the two directional indicators. That looks good to continue to move higher. So still holding that one. I see no reason to consider exiting. And then we get to last week where we looked at RGLD and maybe something getting ready to happen on the 9th. So a little bit of a breakout and then not really. All right. So it looked like we might be breaking out, especially the next day, the 10th. We had a higher close followed by one on the 11th. So here we go. Higher close on the 12th and then back down we come. So so far, our GLD hasn't made the breakout yet. We can draw our descending triangle here, which is what we were looking at. That's a pretty nice descending triangle. So the question becomes, are we moving back down? Are we going to come back down and get in this descending triangle, moving towards the point, or are we testing the breakout? Because we had kind of a confirmation there with 2 back-to-back up days. This one doesn't really count on the 10th. That doesn't really count as a full-blown breakout. But then we had a higher high and another higher high. So we came back down towards this lower or upper trend line, the lower highs. And so sometimes that happens. You break out, you test the trend line, and then it takes off. Or are we just going to look at that as a false breakout, and we're going to come back down into this point, maybe test the support, gather a self, and trade again? So nothing really too exciting has happened on RGLD. It tends to run. That's one that I've traded over the years as far as one of the miners. But at least at this point, it doesn't seem to be ready to go and do anything yet. But it is good to have a strangle on. Gold could break to the downside. Let's take a look at gold itself real quickly. And then we'll look for a case study for tonight. So you can see that gold back-to-back dojis, right? Boom, doji. It's like, what are we doing? Gold doesn't even know what it's doing. Maybe it's waiting for the Fed announcement tomorrow to see if it can take off and run. So we still have this support right here at 160 that looked like it was going to break. Boom, head fake, right back to the upside. Tapped it again on the 12th, followed by doji. So gold is getting ready to do something. And as far as our case study on RGLD, case study consideration, since that's a strangle, it doesn't matter what it does as long as it does something. But these back-to-back dojis maybe is telling us that gold is finally getting ready to do something. And we'll see if it's to the upside or breaking that 160 level. To the upside, there's plenty of room because it wasn't that long ago, just last August, that we were back up near 195. And if it breaks this 160 level, as we've talked about in the past, there's really nothing stopping it until all the way down here at 140. So we could have a pretty significant move to the downside or the upside. And RGLD normally moves pretty well with gold. So feel pretty good about where we sit with that. All right, so let's take a look and see if we can find any sort of potential case study considerations for this week. If we take a look, now this is interesting, isn't it? So we have a little bit of a down day, and our momentum scan, that's the one that we've designed to catch lower dollar stocks, kind of the more prudent approach to Reddit stuff, lower dollar stocks with good momentum, but backed by fundamentals and solid technicals, not just high short interest. And so zero, there's none in this week. That's kind of interesting. The fact that there's zero, especially with what the market has been doing. So maybe that changes tomorrow on the Fed movement, but that shows you how quiet really the market was today, other than the bond auction, which was fireworks, basically. Again, I know it doesn't seem that big a deal to go from the 2.3s to the 2.5s on a bid to cover, but that's a really big deal. And so that's where all the interest was, the volatility, if you will, today was on the bond side. So nothing to look at from the momentum search. So let's come up here and look for our bullish impulse. There are 5. So we'll click that. And for those of you that may be brand new, again, this program is Profit Source. In my opinion, it's the best Elliott Wave software out there. It's programmed directly from Elliott's mathematical algorithm. It doesn't have anybody's interpretation on it. My interpretations come from our confirming indicators, but not from monkeying around with Elliott Wave. The Elliott Wave formula is intact. It's Elliott's algorithm, but then we apply my confirming indicators in addition to the Elliott Wave count in order to get any sort of potential alerts to send out to our subscribers. That's how our process works for those of you that may be brand new with us. So with this, anything that has EWO, the folks that create Profit Source agreed to go ahead and put those searches in. So our subscribers at Elliott Wave Options that also have this software program can see the exact search parameters that I use, and they can look for trading opportunities for themselves, and they send questions and comments all the time as far as, I like this, I'm looking at this, you didn't send this out as an alert, why? So it becomes a whole educational thing as far as, you know, here's this, notice you didn't send anything out on that, but you did on this. And it's, again, it's educational. So not only do you have this great software program that you can program your own searches in, just like mine were programmed in, but you also can learn what our approach is at Elliott Wave Options and help continue to educate yourself. So what we can do here is they also added in searches. These are under Elliott Wave Options. These are the ones that are exclusive to our Elliott Wave Options subscribers within this program. So you can click on the bullish impulse stocks, which there's 5. Now there's 434 stocks that are currently in a bullish wave 3. If we click that button too, boom, now it will sort both. So are any of those 5 bullish impulse stocks currently in a wave 3? And nothing showed up. So the answer to that would be no. So unclick that. Let's go back to the bullish impulse, and you can see what we have here. Now, Marsh & McLennan was one that we had in the past. There's a lot of big names on here that I think have traded pretty much every single one of these in the past. Maybe not Arthur Gallagher, I'm not sure, but A.O. Smith, you can see that. Anybody, tell me what that is, that has listened to any of the videos that I've done over the last years, basically knows that I like this when you move in a 45-degree angle to the upside. So now we add the Elliott Wave on there. We're at 124% extension on the wave 5. So we have room to go to the 161.8. ADX is trying to curl up, positive directional indicator curling up. That looks pretty good. So let's see what the options may look like here. And there's some liquidity with not, well, if you go out to July, the spreads get a little wide. So that's a little bit of a problem. The in the money options, the spreads aren't wide. At the money is okay. And there's one that's out of the money that's just a slightly higher delta than what we like, but there's over 100 contracts and it's decent. So yeah, this one would be okay if this is the best one that we find. before we look at the rest of them. I'm going to click through all of them because, again, I think they're all ones that I've traded in the past, which means if I've traded them, they've had good Elliott Wave patterns. But this was a really nice setup here where we had this really long consolidation. So right through this area around 55, 56, and then we broke to the upside. We're on a 45-degree angle. Good looking DMI. Now, if you notice, the CCI is a little high. We go back and look. It's not at its peak yet, but it doesn't have a heck of a lot of room to run before we might hit some resistance. So that's kind of where we would be there. So a little bit of room to run, but something to keep an eye on as far as when we might get overbought again. But I like that one, so I'm going to leave that one there. So what you can do is when you have one of these, just instead of going back to the pre-computed list each time, once you have a chart up, you can come down here and click this arrow and it'll advance it to the next one, but it replaces the current one that you have. So if that's one that you want to keep an eye on, say, okay, I like that one, let's go look at another one, then I'll just go back to the search then and click on the next one. So PSA is public storage. And with the way housing has been going, that makes a lot of sense as another good looking chart. Might even be better than what we just looked at. So far, this looks awfully good. Take the oscillator off. A good 100 plus points to go on the CCI, if not 200. And look at that, ADX with the positive directional indicator. Put Elliott Wave on, and so we can see we are within the wave 5's target around 255. We're at 245, so 10-point move. Let's see what the options look like. Let's see if a 10-point move out of a $250 stock is enough to make it worthwhile. So these would have to be pretty decent options. So we go out to June, and they're slightly expensive, but there's 800 contracts on out of the money right at the delta that I would like in June. So that looks good too. So now we have two to choose from. So I'm going to leave that one 2 for 2 right off the bat. And then these are the ones that I really want to look at. And we already have 2 really good ones. So you can see the search parameters work pretty well as far as finding opportunities. Not always. Sometimes you get a handful of them and none of them are any good. But so far we've 2 for 2. Another one with CCI about a 150 point range, so can move. Now this one is going to get disqualified because the ADX hasn't broken through 20 yet. It's trying to curl back up, and you might be wondering if you're new, well, if that's an indicator that you're using in your system, why is it showing a result that hasn't triggered yet? I do that on purpose because I want to follow stocks that have an ADX that's rising even before it hits 20. So it becomes on my watch list that I look at every day. So I'm not just looking each day at our existing alerts and at potential new ones. I'm also looking at watch list candidates that are getting ready to be qualified for potential alerts. So this one would move to a watch list. It's not something that I would be ready to do anything with at this point in time. So now we'll just click the arrow, and then you can see how it advances to the next stock without having to go back to where your listing was. The ADX is, boy, that is really nice. You wonder how much further this has to go with the ADX approaching 35, but it's not to 40 yet. And you can see right back here, we got above 40 at the wave 5 high. So very likely we're going to make a new high here. CCI, again, 100 plus points to go to the upside. That's not one of the filters as far as having 100 points to run on the CCI. That's why I look at it, but it just needs to have a bullish intent. So this is the one, this was the only one that I wasn't sure of what the liquidity may be. So let's take a look. And it's not great, but there's some there. Well, when you go out to July, well, yeah, spreads are, you can't do July. Spreads are monstrously wide. It's a $1.05 width on a 180 by 285, which is the delta that we'd be looking for. It's only got 3 contracts. Even in the April options where there's better liquidity, the spreads are still wide. So that was the one I was concerned about. That's a shame because that's a good looking chart, but the ADX is a little high anyway, so not a big deal. So last but not least, Home Depot, which filled this gap, didn't even blink. Watching this one, I thought, okay, when we fill this gap, that may give it a little bit of pause, but it didn't. And the concern I have here is that we're a little bit overbought. You can see there's a separation from the 10-day moving average. So you know the drill, you know the wording, no security in any time frame, gets very far away from the 10-day moving average. This is there, and it's also at a major point of resistance. Now, if Home Depot could break through this whole area, I mean, there's resistance right here where we are. There's even more at 290. If it could break through that area, it probably gets to 300 at least in a relatively short period of time. We're starting to go just a touch vertical here, which I don't like. I like the 45-degree angle move better than the vertical stuff. Like I like that run at a 45-degree angle. This one you can see is a bit of a sharper angle. That makes me a little nervous. What goes straight up, comes straight back down. And the ADX it's setting itself up. I would have preferred on this move down that it got below 20 and then came back up. Not that big of a deal, just a personal preference. And so at this point in time, I think we eliminate this one too. A little too vertical, not the greatest DMI, not bad, but not the greatest, and a lot of resistance ahead up till 290. So then that brings us back to A.O. Smith and PSA. Both look really, really good. I guess we can just go ahead and write them both down. I mean, it's hard to pick. They're both really good. If you had to choose which one has a slightly better DMI, that would be PSA. But there's nothing wrong with the DMI on A.O. Smith either. So let's just put them both down. We'll follow them both. So for today, our 2 case studies to follow are AOS and PSA. I don't think you could really go wrong with either one of those. So it'll be interesting to see over the next week or two. I'm not really familiar with what A.O. Smith does. Public storage speaks for itself. Also ties in with the housing market, right? People are buying homes, they're moving into new homes, need for storage. You can certainly make a fundamental case for that if you are one that likes to have fundamental backings. We have fundamental backings in the search. In other words, the fact that they're fundamentally sound. They may not have current, a fundamental story currently. It just means that they're fundamentally sound stocks. And you can look at this wave 4 and look at that. 61% wave 4 correction. Doesn't get any better than that. So that means we're in a zigzag as well. So if we come back here in the zigzag, takes you right smack in the middle of that wave 5. This one looks awfully good. Hard to, we can maybe even put just a tiny little star on that one, a touch better, but both of them look good. So there we go. There's our case study consideration for this week. Now with a few minutes that we have left to go ahead and take some Q&A. And Luis, if I'm in Miami, let you know. I will certainly let you know if I get down to Miami. I used to go down there quite a bit, not so much anymore, but I will let you know if I head down that way. Joseph wants to look at, so those futures that you're talking about. Let me know what you're talking about, more specific, Joseph, and I'll pull it up. Tractor Supply, TSCO. A little bit overbought, back-to-back dojis here again. And it's sitting on some support there. It looks like it wants to go higher though, doesn't it? Sitting on that support with the dojis. And the DMI, it's not there yet. Man, this is where it really gets difficult to stay disciplined, because you look at that, you see that ADX breaking above the negative directional indicator, but it hasn't broken above 20 yet. And you see that, and you're like, it's going to, just in a day or two, it's going to do that. Maybe it does, but there's too many times when over the years I've seen these where it looks like it's going to do it and it doesn't. That's why you wait for the actual trigger to occur. But you could certainly make a case for, okay, we're going to break here and move above 20 in between the two directional indicators, and we're going to blast off from this 170 level and run right to that wave 5 target. I want to see it though. I want to see the ADX break above 20 and get between those two directional indicators. And it may be a big update that causes that to happen with those two little tiny dojis. The next trading day is likely going to be a bit more volatile than what we've seen over the past 2 days. So if you get a pretty decent up day, intraday, you can feel pretty certain that the ADX is going to be above 20. But if it's a down day tomorrow and we're coming down to the 10-day moving average, then I think you have to pause and wait, because if it breaks below 170, then it loses that support from the 170 level, and 170 becomes resistance. So then it's a whole different story at that point in time. But depending on what happens tomorrow would be whether I would consider moving into that one or not. But man, that does look really ready to go. Raj, we'll look at those on Thursday night. Qualcomm. Remember now, anything can happen tomorrow. Powell could come out and change that the Federal Reserve is going to, they've already broadcast they're not going to raise rates till 2023. Well, if he comes out and says that maybe we can raise them next year, this market could fall apart in a heartbeat. I mean, we could be headed lower very quickly. So the fact that we're moving higher is we're on pins and needles moving to the upside, especially with the 400 level. So taking off downside protection right now, I don't think is a very smart thing to do. You can see a breakdown, and very easily, all they have to do is interpret something negative out of what the Federal Reserve says as far as inflation concerning them, which they said it hasn't. If they change that wording, if they change their time frame on when they could raise rates, if they change their outlook for GDP, anything could cause a complete flip in the market tomorrow. If they stay status quo, I think the likelihood is we go higher, and we'll take that into account. But anything could happen. You always have to know that anything can happen in the market. You always have to be protected. Now, I know that that's hedging, and hedging isn't as fun, right? It's not as fun as being all in on one side and being right, but it allows you to stay in the game for 25 years. That's what it does. Even if you have some drawdowns here and there, you don't get blown out because you have both sides covered. That's disciplined trading. That's long-term trading. That's not worrying about what happens in your account from 1 month to the next. If that's what concerns you, you shouldn't trade. Trading's not for you. If you're so concerned with what's going to happen in your account over the next month, any month can be a down month in trading. What matters is how you do over the long term. That's how you measure success, and that's how you last, and you don't get greedy and you don't do silly things. You do smart things and you hedge yourself, and knowing that you're giving away potential upside by hedging yourself, but that keeps you alive longer. So it's a big deal. So looking here, we have this gap here in Qualcomm. You already know that my viewpoint is we have an alert on this for our subscribers. I think Qualcomm's going higher. I think Qualcomm's going significantly higher. That's my viewpoint. And I think we're getting ready to break from this level. And the positive directional indicator breaking above the negative would be a good thing. So it's just my personal opinion right now, not backed by all of our indicators. So take that for what it's worth, which is nothing. My opinion isn't worth a thing. The market doesn't care what I think. I can guarantee you the market doesn't care what I think. What matters is a good set of indicators that have proven themselves and work well over long periods of time. That's what matters. My opinion doesn't. So if we get this this positive directional indicator to break above the negative, now we may have something really cooking here on Qualcomm with a gap that's way above here. So that's my view on that. Tilray is one I'd actually like to look at as well. So you can see we had this vertical move up. Exactly why I hate vertical moves, right there, straight up, straight back down. Always happens. And then we look at the fact that this wave 4 here means this pattern was disqualified. So we start over. So what we're looking for now is, and Elliott Wave will relabel when it's a clear signal. So you look at it, well, why isn't it relabeled yet? Because it doesn't know what's happening yet. Elliott Wave is very quick. As soon as it knows what's happening, it will relabel itself. But with a 78% correction, if that was a currency, it'd be good to go. Be like, that's awesome. 78.6 is a really important level in currencies. But past 70% in equities is a different story. The ADX is coming down. It looks like we're climbing up here and trying to hover above that 10-day moving average. Not a very good day today, down 11%. Certainly not what you want to see happen in today's trade, but it's trying to gather itself, I think. All of the, and we can look at, since we're looking at this, we should look at THC because there's so many, THCX is the cannabis ETF. There's so many of these stocks that are out there now. Also had a down day, but look how vertical that move was. It needed a rest day. It was getting a little bit excited, a little ahead of itself. Now here the wave 4 is great. Wave 4 is 61.8. So perhaps instead of picking one of the cannabis stocks, and Tilray is a good one to pick, but instead of picking one individual one, maybe it makes more sense to do the ETF. The pattern's better. It was a little bit overbought yesterday, and so coming back down, it looks like about as good as a 5-wave pattern can look. You look at the DMI, and the positive directional indicator is closed above the negative. The only thing is that we've had a few days. This is the only negative that I see on this, is we've had a few up days here, and the ADX hasn't even leveled off. It's continued to go down, even with all these up days. 1, 2, 3, 4, 5 days. You want to see this at least. It does. The ADX is slow. It's a lagging indicator. We've talked about that before. It's like turning a big ocean liner out in the water. It takes a while to turn it. It takes a while for the ADX to recover. But you want to at least see it stop going down, at least go sideways would make more sense than it turning up. But the fact that it's still going down is concerning. Staying above the 10-day moving average, if it's going to stay above the 10-day moving average again, and we get these two directional indicators to separate, then we may have something significant moving on here. The pattern still looks good, though. The Elliott Wave pattern looks good. The confirming indicators aren't terrific. Let's see what the CCI is looking like. See, that looks like it's coming off the deck. Doesn't look like it's coming off the bottom. So the next day or two should tell an awful lot on this. So see where we go. Let's go back to the SPY, an expanding triangle. It certainly has a really nice set here of lower lows, and there are higher highs. No doubt about that. The market's making higher highs. Would have preferred to see some of these bars get up here and touch. There's not that many touches of the upper trend line. good out here in the mouth of the triangle should be good volatility, intraday volatility is my point. And for 4 days there, it was really good. It's kind of calmed itself down a little bit, but yeah, I could see that. Michael, that's a good call. Does really appear to be an expanding triangle. It's a good job. Chris in New Zealand, what sectors of the stimulus package will support clean energy infrastructure types, etc.? Well, value energy, the XLE has been doing well, and really like the XLY a lot. Consumer discretionary with the stimulus, I think, makes an awful lot of sense. Infrastructure is a important thing. What I've been hesitant on is they wanted to get through the stimulus package, right? Congress wanted to get this done. All right, so got the stimulus package done. Now let's see a little bit more detail on what they're going to do from infrastructure spending, et cetera. I think you're right, Chris, as far as where things may be going along those lines. Just think that now that the stimulus is done and passed, we may be able to get a little clearer picture of where to go there. So, like the XLF, we were in the XLF and we got out of that. If interest rates are done for now, that probably means that the XLF is done for a while. So we timed that exit pretty doggone well. But I think as far as exact things, that may become clearer over once we start getting a little bit more clarity from Congress on what type of money they're going to start putting in that direction now that the stimulus. So anyway, to answer your question, Chris, they're sending stimulus out to consumers. So where are we? We're in consumer discretionaries, the XLY, because I think that makes sense. Can we look at AMD? Thanks, Georgie. I knew somebody was going to ask. I knew it. So I haven't done a webinar in 3 months without somebody asking about AMD. But it has gotten better. Now, last week when we looked at it, what did we say? So we had to hold this level right here, and it did. And so now it's trying to move back to the upside. I mentioned to you that there was news about it today talking about how it's trying to break back up. The important thing was we broke above the 10-day moving average, and we've held it. The only issue that we have now is the 50-day. So it's looking a whole lot better than where it was a week ago. No doubt about that. If we can break back above 85, break back above this 50-day moving average, the 10-day still got a ways to go to get to the 30. But you could make an aggressive bullish call and go long this when it breaks above the 50-day moving average. Really hard to go long stocks that are below the 50-day moving average. That's a really difficult thing to do. You can go long if they're below the 10 because the 10 is so, short-minded. But below the 50, that's a big deal. Waiting for the 10 to cross the 30, you could miss a few really good days doing that. But if it got above the 50-day moving average or broke above 85, then you could look to go long there and feel a little more comfortable with it. And you come back and say, well, then we've already missed 75 to 80, but this thing was in danger of all hell breaking loose to the downside. There's a gap there. There's a gap there. There's support all the way down at 55. If it hadn't held 75, then it could have gotten really ugly for AMD. That doesn't matter anymore. It did. It held. It's going slightly vertical for me. I don't think that's going to be the angle that gets it above the 50-day moving average. So perhaps it pauses here a little bit, gathers itself, and then moves above it. So the thing here is above 85, above the 50-day moving average. Things look much, much better for AMD at that point in time. Is Tesla in a small triangle? Wanted to let you know that there are support guys on there. I should have said that in the beginning. If you had any administrative type issues, they're there for you. And we're approaching the top of the hour, so we'll take a few more of these. Is that a small triangle? It's a really good ascending triangle. It's what it is. And for Tesla, it's not that big. For a lot of stocks, it would be huge, wouldn't it? With the low down around 520 and the top up around, it's almost a 200-point wide triangle. So yeah, it looks kind of small for Tesla, but for most stocks, you look at, that's a gigantic triangle, but that is a definitely an ascending triangle. So whoever you are, that's a good call. That's a good looking ascending triangle. And so we basically have that covered because we're long and short Tesla right now. And you're like, well, what are you doing? Did you create a triangle? Not really, but we have both long and short, and we're going to manage it. And this triangle is helpful in that standpoint. It's going to help us to manage both the long and short positions from here. Gary, sounds like Rob purchased his humidifier. He just came back to Florida. That's basically what happened. He got back down here into the 80s where there is humidity, and yes, that helped a lot. My throat still hasn't fully recovered from the dryness. I talk too much, I guess, for dry air. Heat, whatever, it dries out the air and it dries out my throat. I just don't do well in low humidity. Thank you, though, for that. Thoughts on VIX calls here? Oh. So let's take a look at, Christopher, on the calls on the VIX here. So we've been talking about it for how long, and this is actually going to be in the recording tonight too, because I was watching this today as well, as you obviously were. Now it's not really a doji, but that wasn't a great day today, right? So again, the Federal Reserve could throw a wrench into everything by what their terminology is tomorrow. If they change their outlook on when they're going to raise rates, et cetera, anything could happen tomorrow. But we're so close now. We talked about it when we were down here, when we were down here, when we were down here. So each of these times, there, and there, I would talk about how, is this the time we're going to come fill that gap? And each time, support held, and we move back to the upside. But now we're breaking that level of support again, and we broke it a little bit more than we did back in February. So are we going to come down and fill this gap? Is it support going to hold and turn back to the upside? We are just a little bit oversold there on the VIX. And you might think, well, does the 10-day moving average really matter it matters on anything. Remember the expression, no security. If you can trade it, the 10-day moving average matters. And so there is a little bit of separation here, which means that maybe tomorrow's not the greatest day, or maybe it comes down and then we snap back after it fills the gap. But it's certainly an interesting point here, as far as being so close to filling that gap and breaking that level, but also at the same time being a little ways from the 10-day moving average. So we'll see how that breaks out. Graham asks, what do I consider too wide in a spread? That's a really good question, Graham. When I'm looking at option spreads, if you look at, now you can look at the bid or ask, but 10%. So let's say there's a $5 ask. So 10% is 50 cents. If the spread between the bid ask is greater than 50 cents, that I consider a wide spread. So anything greater than 10% of the width of the spread from the ask price, I consider to be wide. Now that doesn't mean you still don't put that position on. Then there becomes variables, right? Well, how is it 55 cents or is it $2 wide? So there's variables that come in at that point in time. But to answer your question, that's the range, 10% of the ask price. If the spread between the bid and ask is greater than 10% of the ask price, I consider that a wide spread. But again, to hedge the conversation, that still doesn't mean you don't get in. Just know what you're doing when you're getting in. That means you're giving up slippage on the way in and on the way out if you put something on that's bigger than that. So I'll take one more and then we'll close this out. It's a really good question though. URA. Uranium. Well, I can see why you're asking about that. That thing is often, look what we had here. Nice triangle. Where was Yeah, see, the ADX never got low enough. That's why it never showed up in the search. But here's the concern. You already know what it is. You know what I'm going to say because I've already talked about it here. Now we have a wave 5 that's at 100% extension. That's a problem. We got a doji today. That's a problem. We went vertical. That's a problem. And let's see, our breakout was 16, a little over 3 points. And the breakout was 18. Let's see, it's 100% breakout. I think that's done its thing. And we look at the 10-day moving average, you already know it's going to be way overbought. It would be hard to continue to go long this right now. Now, it may capture itself because we're overbought significantly here. We've broken 100% of the mouth of the triangle, and we went vertically to do it. And we're also at a wave 5 that's 100%. That is resistance, resistance, resistance on all of those counts that I was mentioning there. Again, I'm not saying that it doesn't go higher. At some point, it would be difficult for it to go higher right now. It needs to consolidate that, even if it just goes sideways, unless the 10-day moving average catch up. Because remember, that wave 5 can go to 161.8. It doesn't have to stop at 100. It just means the 100% extension is resistance. That's all. It doesn't mean that it's completely done. Maybe it's done, but it doesn't necessarily mean it is. So let's look at the DMI. And you can see, wow, the DMI looks like it's setting up like it may just be getting ready to run. So if it consolidates this overbought for a day or two, the DMI sets up a little bit more. It could take off and go again. And then the next target would be 161.8% extension. It looks like it wants to rest for a day or two, at least right now. It'd be very difficult for me unless it backed up to 19 tomorrow to go long that right now. It's certainly worth keeping an eye on with the way it looks like the DMI is trying to set up for another attempt higher. But of course, if it does go sideways, does the DMI stay looking this good? You know, you have to evaluate that at that point in time as well. So I want to thank everybody again for your attention each and every week. Thank you for your time. Very respectful of people's time. It's the most valuable thing that we have is our time. So thank you for being with us. Hope you have a wonderful week. We'll be doing an SPY update in the next day or two, talking a little bit more about what happened in the bond market and how it affects the equities market. You got a little bit of a taste of it here, though. But we'll talk about Bitcoin, et cetera, there. So have a great week. We'll see you again next week. Thanks, everybody.